Alright, let's start with a question that's probably bugging you. Why are some of the wealthiest investors and real estate giants suddenly acting like kids on Christmas morning? Because the new Opportunity Zone 2.0 program is about to drop, and it's packing tax perks that make the original look like a practice run. I mean, permanent tax breaks? A 30% discount on deferred gains in rural areas? This isn't just a policy update, it's a full-blown financial strategy goldmine. But here's the twist, the smart money isn't waiting until 2027. They're already placing bets on zones that don't technically exist yet. Let that sink in. Now, let me unpack why this matters. The original Opportunity Zones were like a pop-up restaurant, flashy, but with an expiration date. Oz 2.0? It's permanent. That permanence changes everything. Think about it, if you're a developer or advisor, you're not just chasing a quick win anymore. You're building a legacy play. And the IRS throwing in a 180-day look-back period for 2026 gains? That's like getting a backstage pass to retroactively tax-optimize your portfolio. But here's what most people miss. The real magic isn't just the tax cuts. It's the way this reshapes investment geography. Rural areas just got a $1.3 billion neon sign saying, "Develop here," thanks to Peakline's new fund splitting metro and rural strategies. Let's dissect the incentives. The 10% automatic tax reduction after 5 years sounds cool, sure. But the 30% basis step up for rural zones? That's the sleeper hit. Why? Because it's not just about deferring taxes, it's about rewriting the math on long-term gains. And honestly, this feels like the government waving a giant carrot to fix a systemic problem, rural economic stagnation. But wait, should we be skeptical? Absolutely. Critics will call this corporate welfare, but here's my take. OZ 2.0 forces investors to play the long game. Unlike the original program, where speculation ran wild, the rolling deferral and rural multipliers demand actual community investment. What's fascinating is how advisors like Sachs's William Connor are pivoting. They're not just selling tax breaks, they're framing OZ 2.0 as portfolio diversification armor in a high-rate world. And with the SpaceX and Anthropic IPOs looming, the timing couldn't be better for investors sitting on massive gains. But here's the gamble. Developers launching funds pre-final zone designations are basically betting their chess moves 10 steps ahead. They're assuming their existing landholdings will align with the new maps. If they're wrong, that's a $1.3 billion blunder. But if they're right, they've cornered the market on America's next economic boomtowns. So, what's the bigger picture? This isn't just about tax code tweaks. It's about redrawing the map of opportunity itself. OZ 2.0 could accelerate urban-rural economic convergence, or deepen existing divides. The cynic in me wonders if this will just turbocharge gentrification. But the optimist sees a chance to rebuild forgotten communities through private capital. Either way, one thing's clear, the 2027 deadline isn't the finish line. It's the starting gun. What do you think, calculated gamble or systemic fix? Drop your take below.